Good morning, and welcome to episode 113 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, March 8th, 2023. Tensions between the U.S. and Russia have been high for some time, primarily due to the proxy war being fought over Ukraine for the past year plus. But recently, tensions between the U.S. and China have risen as well. Ever since the weather balloon was spotted over the U.S. and shot down or taken down, tensions have kind of gotten worse. We were close to having some sort of a ceasefire talks with China in terms of calming things down until the weather balloon incident. The visit to Beijing was called off, and now things seem to be spiraling out of control. President Xi Jinping recently said that basically the West, led by the U.S., has pursued a policy of containment, encirclement, and suppression of China, basically choking them off from the world economy. And then that was followed up here, I believe just yesterday, with Qin Gang, the foreign relations minister for China, saying that if we continue on this track, we are certainly headed toward conflict and confrontation. Against that rosy backdrop of foreign relations, President of the Federal Reserve, Jay Powell, got in front of Senate yesterday, and he gave some testimony for the Humphrey-Hawkins Act, which is now defunct, but they still honor it. Today he'll be speaking to Congress. But yesterday his comments basically said that we are prepared, the Fed is prepared to go 50 plus basis point rate hikes, so more than people think they will do right now. Everybody kind of thought we were down to 25 basis points. And they also said that they're willing to do it for much longer, so go much higher and for much longer than previously anticipated. And as you can guess, the markets did not like this. They went ahead and pulled back. All the U.S. stock market indices pulled back. Gold, silver, platinum, palladium, everything is down. In fact, let's take a look at the numbers for today versus a week ago. Gold is at $1,817.20 an ounce. That's down 1.1% from $1,836.90 last week. Silver tends to be more volatile, up and down. Was more volatile to the downside this week. It's down 4.1% to $20.22 from last week at $21.08. The platinum is down to $9.54. That's $15 from $9.69 last week. That's 1.5% drop. And palladium's down 0.5%, or $8 to $1,478 an ounce from $1,486 last week. Gold-silver ratio, as you can expect, the number of ounces of silver it takes to buy an ounce of gold has gone up in the past week, with silver dropping precipitously. It's at 90.31. We haven't been to 90 in a long time, versus 87.51 last week. And the U.S. dollar continues to flex its muscles and surge. It was 104.25 last week. This week, it's 105.72. cropping back up to that 106 level, where personally I think we're seeing the peak of the dollar strength of late in this bear market rally. We've got a fantastic newsletter coming out tomorrow, information line. We've got guest articles from Alex Green, investment director of the Oxford Club. We've got Dan Denning, the macro analyst for Bonner Private Research. And we have Adrian Day of Adrian Day Asset Management. We're going to cover Bitcoin. We're going to cover two different angles on the dollar and try to explain what's going on with gold pricing in dollars of late. I think the insights are well worth the read. So be sure to look for that Thursday in your inbox. As always, we'd like you to go ahead and follow us and subscribe to our YouTube channel, like us, send us your comments and questions. Go ahead and subscribe to our social media and our newsletters. Again, the March issue is due out tomorrow, and it is worth the read, so if you're not subscribed, do it. But don't ever forget that getting rich starts with keeping what's yours.